So let's move on to our next topic, which is financial scam. So when we say financial scam, it is a fraudulent scheme designed to trick people into losing money or personal information. We have the example here is the phishing, investment scams, romance scams, and etc. So we're talking about a big problem, which is money scam. So these are bad tricks. As I say, people used to steal your cash or private details. They can happen in many ways, like fake calls or online messages. It's really important to know about these dangers so you can keep your money safe. So let's now move on to 5 common financial scams. Number one is phishing. So when we say phishing, it is an internet trick or treating where criminals pretend to be legitimate companies to trick you into giving them for your personal information like your bank account, number, or passwords. They often do this through fake emails or websites that look real but are actually designed to steal your data. So, um, meaning it is a tricky way of bad people trying to steal your secrets. They often pretend to be someone you trust, like your bank or popular website. You might get a fake email or text message that looks real. It might say there's a problem with your account or you won a prize. They want you to click a link in that message. This link takes you to a fake website that looks just like the real one. If you type your username or password there, the scammers steal it. They can then use the money. Of course, always be careful and think twice before you click links or share your private information. That's very important. So the next one is social media scam. So when we say social media scam, it is financial scams on social media. Involve criminals using fake profiles, ads, or messages to trick you into sending money or sharing personal information. So, social media scam. Okay, imagine you're on Facebook or TikTok. A message pops up saying you won a huge prize like a new phone or lots of money. This message looks exciting and seems real, but it's actually a trick from a scammer. They tell you to pay a small fee to get your prize, or a new friend online might suddenly ask you for money because of an emergency. They just want to steal your cash. If you send it, the prize never comes and the friend disappears. Always be careful with strangers online. So that's very dominant right now. So next one we have phone calls. When we say phone calls, this is kind of scam that is also called or known as phishing. Involve criminals using phone calls to trick people into giving up money or personal information. So scammers use the phone to try and trick you. Basically, they often pretend to be from a trusted place like your bank, a government office, a well-known company, or even someone you know. They might make you feel scared, excited, or rushed so you don't have time to think. Their main goal is to get you to send them money, give your bank details, or tell them your passwords. So be careful. Next one is stolen credit card numbers. So when we say stolen card numbers, it is a financial scam involving stolen credit card numbers occur when criminals steal your card information and use it for unauthorized purchases or transactions. So sometimes bad people get your credit card numbers without you knowing. This is called a stolen credit card number. They can get it from fake online shops or tricky emails. Sometimes hidden devices at gas pumps or ATMs can copy your card details. Once they have your number, they use it to buy things. This means money leaves your account that you didn't spend. It's like a stranger using your money. That's why always check your bank statements carefully for strange charges. If you see something odd, call your bank right away. Keep your card number safe from these tricks. So last, from the 5 common scams, We have identity theft. So when we say identity theft, it involves someone using your personal information without your permission, of course, to steal your money or commit other crimes. Identity theft specifically rather, means using your name, address, social security number, or other identifying info to open your accounts, get credit, or commit fraud in your name. So, it is when someone pretends to be like you. They steal your personal information, just like what I've said, your name, your birthday, your address, and then etc. They might get this from your lost wallet or tricky online messages with your stolen details. They can open new credit cards. They might even try to get loans in your name. This can cause you big money problems, of course. It can also mess up your good name. It's a very serious crime. That's why always guard your personal information and be careful who you share it with. So the next topic that we have is 10 tips to avoid financial scam. So the first one, next slide, is never wire money to strangers. So meaning, when we say never wire money to stranger, it means don't send money to someone you don't really know and trust. Wiring money is like sending cash directly from your bank to theirs. Once it's sent, it's almost impossible to get back. The scammers often ask you to wire money because it's untraceable. They might tell you a sad story or promise you a big prize as usual, but if you wire money, it's usually gone forever. This is a very common trick in many scams. Always be careful with your money. Only send it to people you know very well, like family or close friends. So the next one is don't give out financial information. So this means that don't share your private money details with just anyone. It's like the first one. This includes numbers like your bank account, credit cards, or your secret pins. Especially now we have GCash and other transaction application that all about our financial or money. It also means keeping your passwords to online banking safe. You should never tell these numbers to people who call or text you unexpectedly. Even if they say they're from your bank, be careful. Your real bank won't ask for your full PIN or password over the phone. Sharing this info lets bad people steal your money. So always keep these numbers a secret. So number 3, we have never click on hyperlinks in emails. So this means that you should not press on any blue underlined text or buttons that take you to website. These links can be very dangerous. Scammers often use them to trick you. If you click a bad link, it might send you to a fake website. That fake website could try to steal your passwords or bank details. It could also put harmful software on your computer or phone. Even if an email looks real, be careful with its links. Instead, go directly to the website by typing its address yourself. This helps keep your information safe from tricky scams. So number 4, we have used difficult passwords. So you want a password that's hard for others to guess but easy for you to remember. The trick is to use several ordinary words together. Don't just pick one simple word like apple. Instead, try linking a few every words like blue car jump. You can also add a number or a special symbol in a place that makes sense to you. For example, big trees is stronger than just big tree. Longer passwords are always better, even if the words themselves are common. Think of a short, memorable phrase instead of a single word. This makes it much tougher for computers to figure out your password. So focus on making your password long and a bit unusual with words you already know. So number 5, never give your social security number. So here in the Philippines, while there isn't a single social security number like in some other countries, important identifiers like your SSS number, PhilHealth ID, and TIN ID are very sensitive. Here's why. Your SSS number is your key to social security benefits like pensions and sickness pay. Sharing it carelessly could allow someone to access your personal records, to even try to claim your benefits. Think of it like your personal banking ID for government help. Your PhilHealth ID number links you to your health insurance. Giving it away could let someone else use your health benefits without your permission, or even create fake medical claims. It's vital for your health care. That is vital for your health care, of course. Your PIN ID is used for all your tax matters. That is also very important. If someone gets your PIN, they could file false tax returns in your name or mess with your financial standing. Keep this number safe, of course, just like your wallet. Only share them with trusted government agencies or employer when absolutely necessary. Be careful with who you give those important details to. So the next one we have number 6 is install antivirus and spyware protection. So together these programs keep your device safe from many digital threats. They scan your files and watch for suspicious activity. It's very important to keep these protections updated so they can recognize new dangers. They help you to browse the internet safely and protect your private information. Without them, your computer or cell phone is an open door for bad stuff, of course. So number 7, don't shop with unfamiliar online retailers. So yan, when you want to buy things online, only buy from shops you already know and trust. This means places like Lazada or Shopee in the Philippines or big well-known brand websites. Don't buy from a website you've never seen before that just pop up. These unknown shops might look real, but they often are not. They could take your money and never send you the item you paid for. Or they might send you something completely different and cheap. It's like buying from a stranger on the street. You don't know if they are honest. Always check if the website has good reviews from many people. If a deal seems too good to be true, it probably is a trick. Stick to shopping on websites there you feel safe. Next one, number 8, we have don't download software from pop-up windows. So think of pop-up windows as strangers knocking on your door. Sometimes they look friendly, but often they have bad intentions. When a pop-up window tells you to download software, it's usually a trick. These windows might say your computer has virus or that I need a special program. Don't believe them. If you download what they offer, you could actually be letting in harmful software. This bad software can steal your information or even break your computer. Only get programs from trusted online website and official website. Never click buttons or links on pop-ups that tell you to download something. It's much safer to close pop-ups right away. Your computer is usually fine. It's the pop-up that's trying to trick you. So next, number 9, we have make sure that the websites you visit are safe. So of course, when you visit a website, it's important to know if it's safe. First, always look for a tiny padlock icon next to the website address in your browser. This padlock means the connection is secure. Also, check that the website address starts with the HTTPS, not just HTTP. The S stands for secure. So, take note of that. Next, look very closely at the website address itself. Scammers often create fake websites that look almost real but have tiny spelling mistakes. For example, Amazon.com might be Amazon with letter O or 0.com. If it is wrong, close it. See if the website has a contact us or about us page. Real companies usually have clear ways to reach them, like phone number or address. Be wary if you can't find this information easily. Also, watch out for too many pop-up ads, as this can be a bad sign. Finally, trust your gut feeling. If a website feels strange or too good to be true, it probably is. It's always safer to leave a suspicious website than to risk your information. And lastly, for the last tips that we have to avoid scam is donate to known charity only. So when you want to give money to help others, it's best to donate only for charities you already know. This means choosing groups that are famous and have a good name. Um, think of big names like Red Cross or World Vision. These groups often have clear websites and ways to contact them. They also show where your money goes, which is very important. Be careful if someone asks for money for a charity you've never heard of. It's always a good idea to check if the charity is real before you give anything. You can look them up on government lists or official charity websites. These simple steps help make sure your money truly helps people in need and doesn't end up in the wrong hands. So that is the 10 tips to avoid scam. So we're done with the financial scam and the 10 tips to avoid them. So let's now move on to financial scam among students. So we have 4, but let's define first what is the student scam. Student scam, also known as academic fraud, are fraudulent schemes that prey on students, often exploiting their vulnerabilities or trust in the established situation. So, meaning, rather, the target of the scammers here were the students. So, let's tackle the first one. So, we have, next slide, fake scholarships. So, these scholarship scams or sketchy scholarships often promise or easy money in exchange for a fee or personal information, leaving families without the aid they sought and sometimes in financial trouble or with an identity theft risk. So meaning fake scholarship is like a trick that pretends to offer money for school but doesn't. It's a scam designed to pull students and their families. Often, these fake offers ask you to pay a fee to apply or process the scholarship. They might promise a lot of money very easily, which is a big red flag. Sometimes they just want to collect your personal information to sell it. True scholarship never ask for money from you. Be careful if an offer seems too good to be true. Always research the organization offering the scholarship. A legitimate scholarship will have clear application instruction and contact information. If you're unsure, it's best to avoid it. So next one is diploma mills. So meaning it is a company that claims to be a high school, technical school, college, university, or other educational institution and grants legitimate diplomas and degrees for a fee. So meaning it is a fake school that sells degrees or diplomas. They don't offer a real education, courses, or proper learning. Instead, you simply pay money and they give you a piece of paper that looks like a real degree. These degrees are usually worthless because they are not from a recognized or accredited institution. Diploma mills often use names that sound like real universities to trick people. They might also promise degrees very quickly, sometimes based on life experience alone. Using a diploma from a diploma mill can have serious negative consequences, of course. Employers can find out the degree is fake, which can harm your reputation and career. It's important to always check if a school is properly accredited before enrolling. So next one, we have online book scam. So since we're more on technology now, students were using um, online books or ebooks. So we have online book scams. While students often go to the best deals on textbooks online, scammers can use this opportunity to get students' credit card information. When buying online, make sure to do it at a credible site. So meaning, online book scam is when someone tricks you or the student into giving them money for books you never get. They often use fake websites on social media. These scammers might offer very cheap or rare books to tempt you. You pay them, but the books never arrive. Sometimes they send you a book that's not what you ordered. They might also pressure you to buy quickly. Their goal is to take your money without providing the promised books. Always be careful when buying books online from unfamiliar sellers. Check reviews and look for secure payment options. If an offer seems too good to be true, it probably is. So, I think this is the last one. The last one is the credit card scam. So, when we say credit card scams, rather, credit card credit card scam, these are the companies or the scammers go to school campuses to convince students to fill out card applications. Scammers may also grab this chance to steal students' information. So, this is when someone tries to trick you into giving them your credit card details or money. They pretend to be someone trustworthy like your bank or a well-known company. Often they call you, send fake emails, or create fake websites. Their goal is to get your card number, expiration date, and the security code on the back. Once they have this information, they can use your card to make unauthorized purchases. This can lead to you losing a lot of money. They might also try to get you to send them money directly, perhaps for a fake price or urgent situation. Always be suspicious of unexpected calls or messages asking for your card details. Your bank will never ask for your full credit card number over the phone or email. If everything or something feels wrong, it probably is. So that's all. The next reporter will be Lyndon.
Let's talk about insurance and taxes. Insurance is a contract in the form of a policy between the policyholder and the insurance company, whereby the company agrees to compensate for any financial loss from specific insured events. In exchange for the financial protection offered, policyholder agrees to pay a certain sum of money, known as premiums, to the insurance company. Insurance is the best form of risk management against certain loss, and there are various types of insurance to choose from, such as life insurance, health insurance, motor insurance, property insurance, business insurance, and etc. Besides, the financial protection derived from insurance entails tax benefit claim on the paid premiums. There are following concepts related to insurance and taxes that every teacher should know. However, he or she should carefully analyze and critically examine well before pursuing any deal with them. The first one is the employer-sponsored insurance. If working in a company with 50 or more full-time employees, the employer is required to provide employee insurance that meets minimum guidelines. Examine the offered plan, but do not pay over 9.66% of household income in premiums. The second one is the marketplace plans. Marketplace plans are available based on an area of residence and income upon meeting minimum coverage requirements. Marketplace plans comes in the 3 tiers: bronze, silver, and gold. Generally, bronze plans offer at least coverage and lowest premiums, while gold plans provide the most coverage and the highest price. Now let's tackle one of type of insurance, the life insurance. Life insurance is a type of insurance that compensates beneficiaries upon the death of the policyholder. The company will guarantee a payout for the beneficiaries in exchange of premiums. This compensation is called death benefit. Depending on the type of insurance one may have, these events can be anything from retirements to major injuries to critical illness or even to death. Here are the following common risk categories. Number 1 is the preferred class. The policyholder is in excellent health with normal weight, no history of smoking, chronic illness, or family history of any life-threatening disease. The second one is the preferred. The policyholder is in excellent health but may have minor issues on cholesterol or blood pressure but under control. The third one is the standard class. The policyholder is in very good health but some factors like high blood pressure or being overweight impede a better rating. Number 4 is the standard. Most policyholders belong to this category, as they are deemed to be healthy and have normal life expectancy, although they may have family history or life-threatening disease or few minor health issues. Number 5 is the substandard. Those with serious health issues like diabetes or heart disease are placed on the table rating system, ranked from highest to lowest. On average, the premiums will be similar to standard with an additional 25% lower claim on the table ratings. Lastly, the smokers. Due to an added risk of smoking, the policyholders in this category are guaranteed to pay more. Aside from health class, age is also a critical factor in determining premiums. Therefore, older people pay more expensive premiums. Now, let's move to the benefits of life insurance. Number 1, it pays for medical and funeral costs. Life insurance helps solve the incurred expenses for medical and funeral services to lessen the grief among family and relatives for being unprepared. Number 2, financial support. Life insurance can become a source of temporary income during the difficult period of adjusting and coping with the loss of the loved one, especially if he or she is the breadwinner. The third one, for funding various financial goals. Life insurance offers additional benefits through the form of fund accumulation for specific future financial goals. And fourth is Act of Retirement Secured Conform. Modern life insurance also serves as a tool that principal holders can use to get in a better financial position in the future. And lastly, it covers the costs incurred from taxes and debt. Life insurance can serve as a protection since the premium can be used to pay for unsettled debts and taxes. Now, let's tackle the life insurance. There are 4 types of life insurance: the endowment, term, and whole life, and lastly, the variable universal life, or the VUL. Number 1. Endowment. It grants a lump sum after a specific amount of time or upon death. The policy owner is required to pay the premium for a predetermined number of years or until specific age is reached. It allows for saving up specific purpose. It guarantees returns upon maturity. It offers some form of insurance of coverage, but it requires higher premiums than other type of life insurance, and it is not the best option for those looking at full life protection. The number two types. The term. It is the simplest form of life insurance to obtain, of which, upon death, the beneficiaries are paid with the benefit. It entails low premium requirements. It is a strong option for policyholders who need insurance but cannot afford a whole life or endowment. It is very easy to understand, but it has no benefit if policyholder outlives the term period set, and premium usually gets higher upon renewal of term. The third type is whole life. It provides coverage for the policyholder's entire life or until they reach 100 years old. It acts as both protection and saving mechanism since a portion of the premium is allocated to build up cash values. It offers permanent protection for full life or 100 years. It is flexible in terms of payment of premiums. It entails fixed premiums, and it usually comes up with additional features and living benefits. But it requires higher premiums, and it is difficult to understand due to complexity. Lastly, the variable universal life or BUL. It serves as both life protection and investment vehicle in one package. A portion of premium is allocated into various investment vehicles for purpose of wealth creation. The contract earnings are based on the performance of selected investments. It takes dual purpose, life insurance plus investment tool. It has no maturity age. The cash value is payable along with the assured sum. The debt component is not limited to face value, and it depicts liquidity wherein funds can be accessed in times in need and can serve as emergency funds. But cash values and dividends are not guaranteed. Face amount and debt benefits are dependent on investment performance, and it includes various investment fees.
Let's talk about the financial stability. When we say financial stability, it's not only about having a millions or billion in your bank account, but also financial stability means also that we have a confidence with the financial situation, very less about paying the bills because of the available funds that we have, and we are also debt free, and we also save money for our future, and as well we also have enough emergency funds. And next is when we also say financial stability, it's not also about of being rich, but rather more of a mindset. Okay, it is a living in a life without worrying about to pay the bill for the future or right now, but and it also becomes stress free about the money while focusing on the energy of the other parts of your life. Like for example, we are not focusing on the financial, but rather we are focusing on ourself. And and there is also a misconception about being financially stable, that you are financially stable when you have a car or a house, but on the other hand, like what I said, stability is about of being not worry on the future or paying bills, but if you're getting
but if you're getting a car loan or housing loan, it also reflects that you still not totally financial stable, because you still have a paying bills in the future, or on the next years, or on the next month. And now let's talk about the 10 strategies in reaching financial stability. Okay? So the first one is make savings automagical. Like for example, 60 and 40. The 60% is for your expenses, and the 40 is for your savings, and that's how you save your money. Okay? And second is control your impulsive spending. Like what they said, I deserve this. The other people always tell that they deserve this, and they they buy something right away, and that's wrong. We should control ourselves to spend and spend and spend, because sometimes there are things that we just think that we need it, but right away after bought it, we just thought na, oh, I just bought it because I thought I deserve this. Something like that. And next is evaluate your expenses and live frugally. And for example, you have 5 categories, and this two is the water bill and the electricity bill, and this three is Netflix, Spotify, and Disney. So the first two is the most important or essential for us, and these three are we can say, or we can categorize it as a wants, because we can live without Netflix, we can live without Spotify, or we can live without Disney Plus. So these three we can evaluate it and just remove for our paying bills. And next is that live frugally. Like for example, you have a 100 pesos left, and you want to eat some donuts, but you need to buy milk for a 1 week, and then the milk costs 30 pesos each. So at the milk you can buy a 3 pieces for a week. So what will you choose? Your cravings or your wants for a week? Diba? Something like that. And next is 4 is invest in your future. The other people, or the Filipino people nowadays, are engaged in investing for gold, and that's fine. That is the uh, best example to invest for you or for your future, because we all know that gold is getting higher and higher and higher every year. That's why it's good to invest for gold, but there's also a lot of investment nowadays that you can try. And next is number 5 is keep your family secure. um, by this, like what I said earlier, the emergency funds, if you have an emergency fund, it is also can be also categorized as your family is secure, because if someone's getting sick on your house, or someone's need some funds or emergency funds, you can what do you call that, you can give it to your family, or you can make them secure, because you have a money right away na you will get. Okay, and next is eliminate and avoid debt. For this, I will make it easy, just like what they said, bawal ang utang. Okay, this is the most important thing that you will do to make you financial stability, because if you're getting a lot of debt, um, it will become harder to you, or kumbaga is mababaon ka sa debt, something like that. And number 7 is use the envelope system. And this in this system, or in this number, is it also famous in other social media platforms, or they're encouraging other people to use the envelope system. Why? Because it makes their money organized and help them to arrange the money that they have, like for example from the needs to wants, or just or optional. It's not optional, maybe it should it should say wants, like it's not totally wants na you just want it just because, but you want this because it also um it also needs, but in a end way, or not too important. Did you get it? Something like that. And next is number 8, which is pay bills immediately. Okay. Sometimes other people are always think that um they should no, they should pay the bills um not immediately, and it causes them to get extra charge. So so because of that, some other people are getting cut their bills, and sometimes it becomes their problem on how they can pay it because of the multiple charges that it have. And number 9 is the read about personal finances. This is the most famous, or this is the most author that know today, because other other influencers suggested this person sorry this person, which is Mr. Chinkitan, a famous author in TikTok, or sometimes in the Facebook. He he promotes on how to save money, or how to take care of a business. And if you read his book, you will gain a lot about of saving, or about on financial. You can also buy his book at the National Bookstore, on the on the what do you call that? You can also bought no you can also buy at TikTok, Shopee, or other online platforms. And 10 is the last part is look to grow your network. Okay? Look for someone who can grow your network. Like for example, is someone who can help your 100k to become 120k, 130k, and such. But like what they said, you should also trust the people, or the person that you want to help with your net worth. Like it's not just about of, oh, I will help you to grow your money, but you should think also that it is important that we know, or we are aware of that people, or what should people, or we should know, or fully trust the people that we help with our net worth. And now let's talk about of signs of being financially stable. If you have some of this, I think you're stepping up to being financially stable. Okay? And the first one is you never overdraw your checking account. Like you don't even, like you don't always check your bank account every paycheck, or every cut off, or every month, just to check. Oh, I think my money is not work. I think my money is not what do you call that? It's not growing, something like that. And next is you don't lose sleep over finances. And number three is you use credit cards for convenience and rewards but never out of necessity. Like for me, it is achievement that you don't it is achievement that you use credit cards not only just because you don't have money left in your wallet, but you use it as a reward for yourself. And it's also good, and I'm happy for you if you do it. Okay. And next is you don't worry about losing your job. Like for example, you're not you're not scared of losing a job. Like it's fine, I have a savings naman, and such, and I can also provide for myself for the days I I don't have a job, something like that, diba? it's it's you feel like, oh, I'm stepping up. And next is you pay your bills ahead of time. Like what I said earlier about the paying bills and extra charge. It is achievement also that you pay your bills ahead of time. Like you don't you don't need to wait for your paycheck to arrive, but when the bill are when the bill when the bills are in front of you, and you just pay it right away because you have a lot of money, or you are being stable, that you can pay it anytime because you still have extra money that you can use for the bill, something like that. And number 6 is people ask your opinion about financial matters and you inspire them. Like who would thought that someone will ask you, or being inspired of what your lifestyle is. Like like other, like sometimes you just thought that you are just getting jealous of what others people lifestyle, but of being financially stable, other people are just thinking that you are good and you are stable because of how how you how you make yourself financially stable, something like that. And next is you're generally happy with your financial situation. Like for example, you don't even think of what should the or what you should eat for the next few days because you have a money from your bank account that you can buy this or something. You can buy a dish that you like, or you cook. Like for example, you want to eat a sinigang from Monday, and you want to eat bulalo from Tuesday, and something like that. And you're just being happy because of you didn't even think of what what should or what the future mm, looks, or what the future happen to you, something like that, diba? So it makes you feel happy because you're getting all the things that you didn't expect, or you're not getting stressed about what will happen, or what should we do, what we should eat for the next days, or the next the next days coming. And next is you finance your cars over 5 years or less. If you take loans at all, you contribute more to your retirement. For to make it more short, I'll just give you example. Like you buy a car with the cash, and then you just think of, or you're just what do you call that, or you just stay or contribute for your future, or for your retirement. Like the days or the years that you loan in your card, you just put it on your retirement plan. Okay. And that's how you reach the financial stability, or that's how it shows being financial stable. And next is that you don't feel guilty when you're out of the when you're out for special occasion, like for example getting absent for someone's special occasion, like for example a birthday, and then and you're being absent at your work, and it doesn't feel like guilty anymore na it's just, oh, I just absent today and it will cost 500 pesos for a day, and you're just getting and you just thought na it is a waste. If I go to my work, I have 500 pesos, something like that. If you're being financially stable, you doesn't care if how many absence do you want, or how many, or what are the other occasion that you want to go for the future, because you have enough money to fulfill the 500 pesos that you absent on your work. And the number 10, I think this is the most, I think, reflect to other people that they are financially stable when they can afford to buy the things you really want. Like for example, um, you have an iPhone 16, and the iPhone 17 is coming this year, and you just want to upgrade your phone because that's not what you need, but that's what you really want. You get it. You're just getting the iPhone 17 because you just want it, and you have enough money, or you have an extra money to buy that, diba? And that's how it works. And recreation, and next is the recreational spending doesn't appeal to you. Like for example, you're getting to a trip, or you're getting to a vacation, and then it doesn't bother you if how many or how much money do you save for that trip. All you need, or all you think is it's about yourself, or making yourself happy, something like that. And next is number 12 is you're a natural saver, diba? It's you maybe you just think of saver, but at the first we're just saving and saving, but in this part, it's just naturally, like for example, it's not automatically 60 or 40. You're just saving because you have a enough money, and the extra money, or maybe we should think that the 60% on this time is the money that you will save, and the 40% is the expenses, because at this time you have enough money, or you have an extra money to buy other things that should. And then there's also a time that it is more than a big from expenses to your savings, and it makes your bank account grow bigger and bigger, and make you also a stable. And next is you're generous. And next is you're generous with money when it comes to charities or helping others. Like for example, um, there is a time that someone asks you to borrow a money, and you're just getting it, and you don't hesitate to give it, or borrow it to other people, because you have an extra, you have a someone, you have a money to give to a someone that's that's who really needs it. Or for example, um you're not you're not you're helping the other people as well as the charity, because you have a extra money, and you think that if you help them, it become a relief to you, or relief to yourself. And next is you're confident about your future. Why? Because when you save and save and save your money, you know to yourself, even though you don't work for at least 2 years, 1 year, you know what, the future you can have a business, or you can provide for yourself, something like that. And next is your net worth grows significantly from and next is your net worth grows significantly from year to year. Like your money will become 100 to 120 to 130, something like that. And next is you have substantial equity in your home. For example, like what I said, you will have your own home. You are not just renting, or you have a big house. Maybe I cannot say a big house, but you have your own house, and that's how you will say that you are also a financial stabi that you are also a financial stable, because you have your own house. You didn't even thought you will didn't even thought how you will pay for your house rent every month, because you have your own. Next is living consistently beneath your means. It means that you spend less more than your paycheck, or your earn. Like for example, it doesn't pay anymore with your house, it doesn't pay anymore with your car, and that's how it and it and that's how it help you to earn, or to be financially stable in your life, because you don't have any more to spend. Like in this two in this two you this payment will go to the savings, and it make more your savings more bigger, something like that. And next is and next is you could survive for months without a paycheck. Like even though you doesn't have a work, it doesn't bother you. Like if your paycheck is delayed, it's okay, because you have money to get on when you're out of grocery, and or the bills are getting pay um it doesn't bother you, something like that, because you have a money, or you are financially stable. And next is and and the last is you feel in control of your finances and never dominated them. Like for example, you know how to categorize your finances, and something like that, and you doesn't even remove them, and such, something like that. And and that's are the signs of being a financially stable. And if you get some of this, or if you're experiencing some of this, and I will say I'm so proud of you, because you just one step forward to getting, or to being financially stable. And that's how and that's and that's how and that is a financial stable.
So let's talk about my part. Integrating financial literacy into the curriculum. So basically, integrating financial literacy into the curriculum is how we teach the students to how to manage their money, how to budget their money. So let's begin. Teaching students about money should be part of every lessons in the schools. This means helping them learn how to save, budget, and spend money wisely. Teachers, school leaders, and the government should work together to make this happen. So basically, it's important to us teachers and school leaders to teach the student how to properly manage their money, because as a Gen Z, if I'm being honest here, I spend too much on the things that I want but not needed. So example is ordering online impulsively, buying things that I don't actually need, but when I see it in online, I buy it because I bought it because I kinda like it, but not needed. So, financial literacy is a problem that can be resolved by teaching the young ones the proper budgeting. This is what Barry, on 2013, underlined in his research. In order to do that, the administrator and the professors need to develop a curriculum that would tackle the importance of having an insight about the value of financial literacy. So, on 2013, Barry underlined in his research that financial literacy is a problem that can be resolved. So we can resolve this by teaching the young ones the proper budgeting that I said earlier, like what I said earlier, and needs to develop a curriculum that would tackle the importance of having insight about the value of financial literacy, because if we don't have an idea about how we budget our money properly, we will waste a lot of money in something that we don't need it we don't need. So on the synthesis and reflection, it talks about that we should have a proper plan on how to teach the students the value of money. So in this plan, we should include what students need to learn, how to use it, how to teach it, what tools to use, and how to check if the students understand the lesson. Teaching these lessons in subjects like math, economics, social studies, and home economics will help students to properly budget their money on their everyday life. Because teachers must be trained well and given the right tools to teach about money. They also need support to keep improving. Good teaching materials and clear ways to measure student learning are important. In order to help the students, we also need to help the teachers, the one that would teach the students the lessons every day. Because and I think the one that will help the teacher is the government. The government will should have take part of it on how to help the teachers by providing structural materials like budget, adding budget, and all the supports that the teachers need